All right, welcome everybody. I've just collected your last homework assignment. No more homework for the rest of the semester, so that's a pretty positive thing, right? All right. So the other positive thing to remind you about is that you have the bonus quiz on Friday, and that's the multiple choice concept inventory that will have the entire class period to take. I think for many of you it won't take that long though. So definitely show up for that. Even if you guess, you have, I don't know, a chance of getting 2 or 3 of them right. And if your quiz average is low, then this has an opportunity to bring your quiz average up. But even if you do poorly on the concept inventory, then it wouldn't affect your quiz average in a negative way. Our final exam is scheduled for the 16th at 10:15, and that's here in this classroom. And you'll need to bring a computer for the final exam. There is going to be at least one Excel question for the final. So if you don't have a good computer, you can arrange to check one out from the library. All right, so any questions related to the announcements? One other thing, I would ask for you to do the course evaluations online. You know, I've gotten a lot of good ideas from those over the years. For example, recording the lectures and putting on YouTube, that was originally a student suggestion. It's through repeated comments from students that they wanted to have more examples in class that I had the idea of like an in-class exercise every single class period. So if you have feedback, whether it's suggestions for improvement or just, you know, if you want to say something that you liked or something you didn't like, I would really welcome your feedback. So please take the time to fill out those evaluations online. All right, so we're going to begin today by reviewing a couple of concepts just with the final exam in mind, and then we're going to move on to discussing income taxes. So what I'd like you to do is get a scratch piece of paper, and this should be the easiest thing in the world, I hope, but just to remind you that there is such a thing as a cash flow diagram because it's been a long time since you had to draw one interpreting it from a problem statement. So I'll give you a few moments to read this, interpret it, and then we'll do the cash flow diagram on the screen. All right, so let's take a crack at this one. We're doing a cash flow diagram, so here is time, and we received the money at first, and so that means it's an inflow to us at year 0, which is today. So we're going to receive a present value of $5,000. And then it says we have to pay the loan back over 6 years, and so we're going to do 2, 3, 4, 5, 6, and we'll label the years. And these are payments, which means the line has to go down, and they're going to be equal length. And it should be A equals 969.39. And then the one other thing that we can add to this cash flow diagram is just as a note, we can add interest is 4.5%. So when you do a cash flow diagram on the final exam, please be sure to include these labels, like what is the P, what is the A, and so on. All right, so any questions about that one? All right, I wish there was a more efficient way to erase this. It's very tedious. Because the next thing I want you to take a look at is the figure that we've seen before when we were talking about MAR, and we were talking about borrowing costs. And so one thing I like to do is provide a figure and then ask you to explain the concept behind that figure. So let me dim the lights a little bit so it's more easy to see that figure. Put it into AV mode. So you've got that scratch paper. Briefly write a story, meaning like a hypothetical here. You know, how can this figure be incorporated into a story that kind of highlights the experiences? Think of like a fictional company, what happened to them, and what are the different things being represented here. All right, so I'll give you a few moments to write a short explanation, and then we'll listen to a couple. All right. Are there any volunteers for someone who could share some of the things they said about this figure? Lance, could you volunteer?
Yeah. I said that it shows that a company has different options.
Okay.
And it visually shows which option should be chosen based on the bar and the
Very good. Very good. All right, how about over here? Someone can share what they said about the picture. Andrew, could you volunteer?
I was going to say that as more money is invested, the rate of profit increases.
As more money is invested, the rate of profit increases. Are you talking about the blue line here? I think you may be headed in the wrong track with the blue line. Who can tell us what the blue line illustrates? Yes? You're right. Why does it become harder for them to get the capital they need for more and more projects? Exactly. Yeah, so the bank views the fact that they're borrowing more and more as an additional risk. And so this blue line is their borrowing costs. A, B, C, D, all of these represent different project options. They've got 7 ideas for projects. The best idea they've got is project A, because that's going to give them 35% return. The worst project idea they have is G, because that would only yield 14% return. So the first thing we can do is their company MAR is 16%, so we could reject G just because of that. But another thing we have to consider is that this blue line is influencing how they pick their MAR. They realize that by the time they borrow $6 million, the bank's starting to get anxious and is beginning to raise the interest rate they have to pay. And so what this illustrates is which projects are acceptable. The cost of each project represents its width. And so project A is about $550,000 is the amount needed for that project, and 35% is the return. And so $6 million is the cumulative amount that we would have to invest to do projects A through E. And so figures like this, you should, as you prepare for the final exam, go back through your notes and try to identify graphs like this. And most of the time, we will have spoken about them pretty extensively. And if you can't remember what I said, then you've got all those YouTube lectures that you can go back and get the explanation another time, or you can just read what the book has to say about the figures like this. All right, so any questions before we move on to income taxes? All right, we'll continue the review on Wednesday and Friday, trying to check in with a few more key ideas. And you know, these ideas that I am providing, it's not like I'm promising that these will be questions on the exam. What I really am trying to do is kick off your studies and remind you of some of the things we've talked about, and hopefully put you back where we were a few months or just a few weeks ago, so that you can study further. All right, so income taxes. I have just handed out to you Form 1040A. How many of you here, by a raise of hands, have filed your income taxes before? Okay, maybe about half the class has done their taxes before. For the rest of you, you'll have that pleasure coming up really soon. A lot of people who are in college don't do it because maybe they're still legally dependents of their parents, and so and also you don't file an income tax if you don't have income. So if you're studying and don't have a job, then that might be another reason. All right, so what we're going to do today is, because I like giving you opportunities to learn by doing. We're going to go through Form 1040A and do the hypothetical calculations for John and Jane Doe. They live on 123 Elm Street, all right? And their social security numbers are here, so hopefully there's no hackers that are watching this video and try and steal their identity. All right. Well, I wanted to point out a few things about this form before we actually get into the nitty-gritty details here. The first is that this is Form 1040A. There's actually 3 different types of 1040 forms. There's the 1040, just the standard one, that actually has a lot more lines than this. If you turn it over to the back side, you'll notice that it has 51 lines. And so this seems complicated enough, but actually the 1040 is a little bit more complicated than the 1040A. The 1040A is kind of like the medium strength version that you use if you have a fairly complicated tax situation, but not really complicated. Like really complicated means maybe you own your own business or you're sole proprietor, or maybe you're including itemized deductions, or you have mortgage interest to deduct. And so the 1040 is what a lot of people have to file, but this is kind of the middle of the road. The really simple 1040 to file is called the 1040EZ. And it's called the 1040EZ because it's so easy to file, I suppose. But basically, that's what you'd file if you have a very, very simple tax situation, like no deductions. It's just you earn money, you get money, and you spend it, you know, like, so most of you, when you start your professional careers, you may file the EZ 1 or 2 times, but pretty quickly you'll be filing the A or the 1040. All right, another thing to point out is that the filing status that you select changes some of the tax consequences and some of the credits that are available to you. So very few people these days fill out these forms by hand. Most people will use tax preparation software like TurboTax or H&R Block, or some people will take all their receipts to Walmart because they've got like somebody there that can do the calculations for you. Okay, so just be aware that when you run the software, it automatically checks to see if you're better off doing a married filing separately or married filing jointly. But for the vast majority of people who are married filing jointly is the better option. You'll actually get more credits doing it that way. All right, the third thing to point out from this top panel is it asks kind of a strange question about whether you want some of your tax money to go into a special fund for presidential campaigns. And they're not asking you for a donation. Regardless of what you check here, you're going to pay the same amount to the government. It's just they want to know if $3 of how much you paid should go into this fund for presidential campaigns, which it's a fine idea. The idea there is they're trying to make it possible for politicians to have publicly funded campaigns rather than taking donations from like companies and then having the companies with influence over them. But nowadays, presidential campaigns aren't using that pool of money very much anymore. So anyways, that's just a little bit of tax form history for you. The first thing that I want you to take a look at is the exemptions panel there. Let's say that you've got this hypothetical family. It's you, your spouse, and your 3 children. And so these exemptions, fill out on the form that I've given you, actually fill it in, because later on you're going to be doing the calculations and you'll need to have, well, at the very least, you'll need to have these numbers. You don't have to necessarily put their names and their fake social security numbers like I have. But later on, when we're trying to figure out how much money we owe the government, it's going to be partially dependent on how many kids you've got. The government subsidizes your children. Not by nearly as much as your children are going to cost you, but if you're going to have them anyway, you might as well get the subsidy for it. All right? So 5. 5 is the total number of exemptions that later on we're going to claim. Us, our spouse, and our 3 children Hayden, Kaylee, and Dakota. Those were the most, well, anyways. All right, so one thing to point out is that dependents, there's a technical definition for that, and a dependent has to be under age 19, or if it's a full-time student, like enrolled in college full-time, then it can be up to 24. But you can't count your children if they provide half their own support. So in your case, let's say that your parents give you like $5,000 a year, but you have a job where you're making $10,000 per year. Your parents shouldn't be claiming you on their tax return. You should claim yourself, which puts more money in your pocket instead of putting in your parents' pocket, just so you know. Sowing the seeds of family strife there. Another thing is that if your kid is married, they can't file a joint return and also be considered a dependent. So that's kind of a strange thing. I guess maybe if you've got children who are married, but maybe still possibly dependents. And then the other thing is your children have to live with you at least half the year to qualify as dependents. And so children who have divorced parents, for example, only one of those one of their parents can count them as dependents. And it goes by whoever they live the most with. There are some exemptions, like if you're a full-time student, you're not expected to live with your parents more than half the year. Another thing is that this qualifying for the child tax credit is dependent on if the child is a U.S. citizen, resident, or national. So in the vast majority of cases for people in this room who will be filing a tax return someday, I would imagine that's a yes. So any questions so far about the exemptions? Okay. This is a form that maybe you've had before. It's a W-2, and you get it from your employer at the end of each year. Normally they'll provide it in the middle of January or towards the end of January, and it's a summary of how much you earned, how much the government has already withheld in prepayment of your tax burden. It also has some information related to how much you contributed to Medicare and Social Security. And then these numbers in the middle of the form, 13 and 12, that's about if you have a retirement plan. And so this would be indicating the amount that was withheld, like this $1,500 was withheld for like a 401k. These other amounts are reduced maybe for contributions to other types of retirement plans, or it can be you can have your taxable wages reduced by paying your insurance premiums with pre-tax dollars rather than post-tax dollars. And then down here at the bottom, it summarizes some of the state income tax withheld amounts. So what I'd like you to do is add up the total for both of these two people, Jane and John Doe. So calculate the sum of their wages, tips, and other compensation. Sum of the line ones, and then put it into line 7 of the form. You'll need your calculator today for sure. You're going to be crunching numbers. Lots of people are intimidated by income taxes. I hope by the end of the day this whole process will be demystified for you, so you don't feel like you have to take your receipts to Walmart and you can just try and do it yourself. Save yourself a lot of money if you aren't intimidated by tax forms. All right, so did everybody calculate the sum of John and Jane's wages, tips, and other compensation? That should be $96,776.92, unless I calculated it wrong. Everybody else get the same number? I don't see anyone's heads nodding. Okay, at least one. I'll take it. Box 1, 48,500 plus 48,276.92. There's a lot of extra information in there, and if you do this like using TurboTax or another tax preparation software, it'll ask you to type in every single box. And some of it matters because it'll use that information to calculate different kinds of tax breaks, and it'll make sure that you paid enough to Social Security and Medicare, for example. But actually, the only boxes that we're going to focus on today are boxes 1 and 2. For now, it's just box 1. And so it's the sum of $48,500 plus the $48,276.92. All right, so put $96,776.92 onto line 7 of your 1040A. Everybody have that amount written there? So line 8A is taxable interest. Let's say that, that these two people, they have some bank accounts that pay them interest. So you see here it says attach Schedule B if required. Schedule B is simply, it's just a form that the IRS has where you can write down all of the taxable interest that you received. And so let me show you what Schedule B looks like. Okay, so everybody put that amount on line 7. Here's Schedule B. It's just some paper you can download from the IRS, and you list your banks. So they got $450 from Everbank, $19 from Citibank, and $178 from Chase. So if you add up all of the interest that they've earned, the total of that interest is $648.27. So the instructions on Schedule B says write that amount on 1040A, line 8A. So that's the form you've got. Find line 8A and write the amount on the form. There's a note on here. Underneath that, it says note. If line 4 is more than 1,500, you must complete part 3. We won't look at part 3 of that form, but basically it relates to people who, it's asking if you have a foreign bank account, because they're trying to crack down on people who are hiding their assets and trying to evade taxes. And so if you have a foreign bank account, then you have to answer a few extra questions related to part 3. Okay, so everybody got that $648.27. That is our taxable interest. Another thing that's on Schedule B is dividends. Dividends are the amount of money that a company pays to its shareholders. So let's say that John and Jane Doe are, they own some stocks. They own some Microsoft, General Electric, and Veolia Environment. So this information, and also the one before it, if you've got a bank account that pays interest, they'll send you a summary at the end of every year. And so you may be wondering, how would you know what amount to write on the Schedule B? You'll just get a form sometime in January from the bank, and if you don't get a form from them, I think they don't have to send you one if you make less than $20 in interest. But you still have to go there and look it up and report it. But the bank, they'll either send it to you or you can look up the information online. And the same thing is true of dividends. If you own stocks, then your broker will send you a form that summarizes how much you earned in dividends through the year. So in these people's case, they earned $747.55 in dividends. So write that amount on line 9A, $747.55. This is all counted as their income. If you have stocks in a retirement account, then that wouldn't go here. This is just stocks that you own in a non-retirement account. But if you happen to have investments in a Roth IRA or in a 401k, then all of those things are shielded from taxes at least until you retire. And then you have to pay taxes on them when you withdraw the money. But during your working years, any stocks or bonds or saving investments that you have inside of the retirement account isn't reportable to the IRS. Any questions so far? So we should have 7, 8A, and 9A, and that allows you to calculate line 15, your total income. So do that. Calculate the total income for these people based on what they've worked, their interest, and their dividends. So I hope that your form looks something like this. The total income should be $98,172.74. Is that right? Does it make you happy to think someday you'll fill out a form that says you made $98,000 in a year? Does that give you something to look forward to in life? Have a big income someday? It's the American dream, right? All right. All right, so we've got our total income. Now, you'll look, there's this thing on the form that says adjusted gross income. There are ways to reduce what the government sees as your income. And one of them is related to if you had student loans. And I think probably there are people in here that have student loans. And you may already know that the interest you pay on your student loans is deductible. Meaning that if you're paying the bank $1,000 a month, $800 of that maybe is going towards principal, $200 of that is going towards interest. The amount that is the bank's profit, the interest that you're paying, is deductible against your income. So in this case, there's a form that you can go to find out how much your student loan interest is worth as a deduction. So let's say over the course of a year, you paid $2,200 in student loan interest. Well, what this form goes through and it asks, basically, it goes through and gives you the calculations that you need to find out how much of that is deductible. Because people who have really high income get to deduct less of this than people with sort of medium incomes. That's kind of where this form is guiding you through, is to find out whether you get the full amount as a deduction or whether you only get a partial deduction. And the first line on the form, you'll notice it says here, do not enter more than $2,500. So maybe people who've gone to medical school, doctors, for example, even if they have huge, huge student loans and they're paying more than $2,500 in a year in interest, then the most you can deduct is $2,500. Now, on the other hand, it's possible that a doctor would have more than $130,000 in income, and then you wouldn't be able to take this deduction anyway. So it takes you through a series of steps, but in our case, our people don't make more than $130,000. So we would start off by filling in $2,200 in line 1, because that was the amount of interest. Let me do that. So $2,200 here. You don't have a copy of this, but we'll do the calculations together. It says enter the amount from line 15 of the 1040. So our line 15 amount is $98,172.74. Then it says enter the total amounts, line 16 and 17. We don't have anything in those lines. So subtract 3 from 2, so that leaves us again with $98,172.74. Okay, enter the amount shown below for your filing status. We're filing jointly, so it's $130,000. 6, it's asking, is the amount on line 4 more than the amount on line 5? For us, it's no. Let's see, is the line of 4 more than 5? No, this is not more than the limit of 130. Okay, so then it says, and go to line 9. So line 9 is just the total amount, $2,200 is deductible. So what you can do now is you can fill in $2,200 as the deduction, And so our adjusted gross income then is $95,972.74. So we've completed the first part of the form. This is the government's view of how much money you made. And this is kind of such an important amount that it has an acronym. This is called the AGI, based on the phrase adjusted gross income. And when you file your taxes electronically, you always want to know what was your AGI from the previous year, because that's the way the government verifies your identity. There's been a lot of concern lately of people having identity theft, and hackers will file a false tax return and try and get the government to deposit money in some, fictional account. And the way that the government has cracked down on that is to dissuade people from filing false tax returns. You have to know the AGI for the taxpayer's previous year. So maybe last year my AGI was $25,000. I have to type that in when I'm filing my return electronically so that the government unlocks this year to be filed. Any questions so far? Okay, so when you flip over the paper, you're going to need to write that same amount on line 22. So 22 and 21 should be the same amount, $95,972.74. All right, so what I'd like you to do now is fill in lines 24, 25, 26, and calculate 27. So read what it says, read the instructions, and calculate line 27. So here's what it should look like. Line 22, of course, was our AGI from the first side of the page, $95,972.74. The standard deduction is $12,600. Now, the standard deduction is what you take, or you can itemize your deductions. And itemizing means, let's say if you gave $15,000 to your church, and you gave $5,000 worth of stuff to Goodwill, then you'd have $20,000 in deduction. If you did that, you'd want to itemize your deductions rather than taking the standard deduction. But if you only gave $5,000 to your church and $100 to Goodwill, then this standard deduction is better than what you could get by itemizing. So then you'd choose the standard deduction. So it's an either-or kind of a thing. If you have a house and you're paying interest on a loan, you can deduct your interest, but in many people's case, once you have had the loan for a while and you're not paying that much in interest, then the interest, itemizing that, is less than the standard deduction. And so you kind of, the tax software will do that automatically, but if you're doing your calculations yourself, you need to keep all of the information about your charitable donations and other types of deductions. So in our case, we're doing the standard deduction. So $12,600 because of our status. The status being married filing jointly. I had a good question as I was walking around, and one of those was about head of household. That's actually a category, a filing category, and so it's not cumulative. It's not that you're the head of the household and you're married filing jointly. I wish you could add them together and deduct it all, but in this case you just have to choose one of the statuses. So us, it was married filing jointly, so then that brings down the income a little bit. And then the exemptions, we get to exempt $20,000 for whatever reason. Like just they decided that every person should have a certain amount of income that is exempt from tax. And so that's what the practical implication of this is. Everyone gets $4,000 a year that is exempt from tax. And since there are 5 people in our household, that means of all the income we make, $20,000 is exempted from income. So a certain amount you can deduct, a certain amount you can exempt. What we're left over with is $63,372 is the taxable income. All right. So the way that you can find out how much tax you have to pay is they've got these tables at the back of the tax forms in the instructions. You can look them up online, or if you're using software, it automatically can calculate how much you owe. So our taxable income is $63,372. So we'd go over here and we would find where in the tax table it's between. And so it's between $63,350 and $63,400. So that means, now we look here, our status is married filing jointly. Thus, our tax that's due is $85.84. So you can enter that on line 28. $85.84 is how much tax the government wants based on our taxable income. But wait, there's credits. We've already talked about exemptions and deductions. Credits are the best of all, because an exemption or a deduction just reduces your income. A credit is actually, and so reducing your income, it's worth something, but it's not worth $1. For example, if you give $1 to charity, that means that maybe you'll save 20 cents on your taxes. But a credit, $1 of credit is worth $1 in your pocket, actually. So that's why we like credits the most. Is deductions are nice because they reduce how much income you've made as viewed by the government. But credits are sort of like the same as tax that you've paid to the government. So let's look in our case at line 31. We paid some child care during the year. Maybe one of these 3 kids was in what's that called? Like where you send your kids to a place and they watch them there? You know, like daycare, right. I'm having a senior moment. I'm only 40. Man, oh man, that's bad. I've lived a hard life. All right. So you've paid $3,000 for child care during the year. And so how much of that is deductible is based on how much income you've made. So they let people with a lower income have more of a credit than people with a high income. So our hypothetical family here has an AGI of $95,000, and so that means that the value of this credit is going to be based on 20%. So our credit is $600 because it was the $3,000 that was paid multiplied by 20%. So the credit for that is $600. So enter 600 on line 31. The next thing is that there's a child tax credit, which is worth $1,000 a child. So enter that amount on line 35. And that's nice to get, but it's not worth having more kids to save $1,000 a year on your taxes, right? Maybe it's worth inventing fictional children, but then after a few years you'll end up in the slammer for that. All right, so we figured out line 31 and 35. Add that up, and that amount of $3,600 is what we have as our total credits. Okay. So you can calculate your total tax now. We've got the total credits in line 36. And then line 37, it says subtract 36 from 30. So you have line 30. 30 minus 36 gives you what you should fill in for line 37. Everybody still has a calculator, right? Didn't evaporate. Okay, so here's what it should look like. $600 credit for daycare. See, I remembered it. $3,000 for the child tax credit, which means the total tax is $49.84. Now, one of the things that we get off of these W-2s is they keep a record of withholding. It's called withholding. And that's the amount out of each paycheck your employer is going to hold a little back and give it to the government. It may not be the right amount exactly, and in fact, it's almost never exactly the right amount. That's why you do this at the end of the year, is to find out if you paid too much each month or if you paid too little each month. It's just to kind of settle things up and to maybe you have to pay extra or maybe you'll get a refund. Fingers crossed it's a refund, right? So if we look at our people, they did a total withholding of $99.79, and that is the sum of box 2. So that's how much money they had withheld during the tax year. But if you compare that to the tax they've got due, that means they get a refund because line 46 is $99.79, but they only should have paid $49.84. So we want amount refunded to us. So here's what the rest of the form is going to look like. Line 48A is where you calculate the amount of your refund. And actually, as you're doing the tax forms online, if you're using TurboTax, off in the corner, it's always telling you this refund amount as sort of like an enticement to finish your taxes. They're trying to make you happy and, so you'll finish up and file early and get your refund as early as possible. So you tell them how much they owe you, you fill in your bank account number, and then like a week or two later, it just magically appears in your account. Now this is all the honor system, believe it or not. This is the honor system. A lot of this stuff they can verify. They can verify how much you earned by your employer telling them, and they do. They can verify how much interest you made during the year because the banks have to tell them how much interest was paid out. They can check to see if you actually have 14 children or whether you're just fictionally saying you have 14 children to get a $14,000 tax credit and loads of exemptions, all right? So don't ever cheat on your taxes, and occasionally they'll audit people, but thankfully the number of audits are pretty low. So we are out of time for today. That is income taxes. You've got a lot to look forward to. We will meet back on Wednesday, so I'll see you then.